Good evening, Anugraha. Good evening, Jayashri, Satish, Shraddha, Takshinamurthy. Good evening, everyone. Let everyone join in. All right, friends. Shall we resume now? Okay, I'm sharing my screen. Okay, so today's main agenda is going to be our mock test paper discussion. Okay, I hope you're all doing your assignments on time. We can review all that right away now. So we have a mentoring batch, November 2024. Let us check the assignments that we have so far. I think we had mock test 1, mock test 2. These two are ongoing. Let me just see how many of you have actually done them. We are going to discuss mock test 1 today. We have quite a lot of students who have submitted. Great job, Aksha, Ananda Krishna, Ashish, Nikita, Rahul, Sandhya Lakshmi, Takshinamurthy. Great job, all of you. We have only 8 people who have done it, but at least 8 have done that. Others, please, please, please do your mock test on time. It is very, very important. Okay. So I'll just take the first mock test now. This was the question paper we created for 70 marks. Here we have the suggested answer also in front of us. I would not take this answer. I would take one of the answers of anyone who's attending my session live right now. Let me check. Rahul, are you there attending live? Yes. Rahul, can you please unmute and speak to me? Is it okay for you if I just, share your answer sheet and discuss the solution? I think Rahul doesn't have the unmute option. I think Rahul just send me a message as hi. I think Rahul cannot hear me. I need somebody else. Who else is there live? Let me just check. We have Logakirti, we have Shraddha. Any of you whose answer has been submitted, please send me a hi so that I can confirm. Dakshinamurthy, are you there attending live? Yes, you're there. Dakshinamurthy, can you unmute and tell me a hi? Okay. Anybody else who's live, please tell me a hi. Okay, Dakshinamurthy, you're there? All right. I'll wait for you. I'm taking your answer sheet also. So friends, all of you take your answer books. I'll give you the guidelines of how to write. Okay. Sure, Dakshinamurthy, connect your mic. I'll wait for you. I have asked you to unmute Dakshinamurthy. Please unmute. I think he's not able to do it. Anybody else who's there who's submitted the answer, please unmute and tell me a hi. We have Aksha, Anandakrishnan, Ashish, Nikita, Rahul, Sandhya. Are you there? No, right?
Hello. Sir,
Yes.
can I? My
Yes,
voice is audible. Dakshinamurthy, sir.
yes, Dakshinamurthy. Good evening. Can we start
Yes,
off? Right.
yes, sir.
Thank you, Dakshinamurthy. So, Dakshinamurthy, point number one. Okay, now when I
Yes.
look at it from a prima facie point of view, you need to improvise a little bit on the writing part. Okay.
Okay.
I'm not
Okay,
saying
sir.
you have to be neat. All that I'm saying is you have to be legible. So, for example, here you have started with a small a. Always it should be acquiring company. The A should be capital. All right. Point number B,
Okay.
you have written company over here, but there's it doesn't look like company in many a times.
Okay, sir. Okay.
So that part, just be careful because when the valuer is reading, he doesn't want your answer to be neat. You don't have to be neat, but you have to be legible.
Okay,
Whatever
sir.
you write, the other fellow should be able to understand. Now here, if you see exchange ratio also, this ratio, it looks more like an R than a T. So that part, just be careful. All right.
O-
We'll take the first question and we'll start discussing. Okay, question number 1A. We have over here KPMS, BRB. They have given the data, illustrate the impact of the EPS on the both the companies. Find out the gain ratio and what is the maximum exchange ratio that is acceptable. This is what they are asking. So it's a very basic question on mergers. We have done the first part. Let's check the solution also parallelly. Okay, this is Rahul's answer sheet. Rahul, your answer is very legible. The way you have written basic data analysis is very, very legible. Okay, right. But I think Rahul is not there, so he's unable to hear to what I'm saying. This is Dakshinamurthy, right?
Yeah, I'm there, sir. Thank you, sir.
You're there? Okay, so I'll keep both the answers open and we can parallelly discuss. All right. So here, when I look at the solution for the first question, let me open the solution also. So first part, you got the market price and you got the EPS after merger as 40. So let us come down. Over here also, earnings per share 40.28 MPS. Then you have the PE ratio 6.25, 40 rupees per share. Fantastic. So you have also got the same answer. Dakshinamurthy, just one doubt. What did you intend with this hash? Is this working note?
Yes, sir. Yes, sir.
Working note
Working,
1,
working note one.
1. And this
One,
is
one F, one D, sir.
1F and 1D. Okay. Again, that F doesn't look like an F. So I
Okay,
get
sir.
this, right? Okay.
Good,
Good.
sir. I correct it.
Fine, fine, fine. I'm just trying to clarify that point. Okay.
Okay, sir.
Then continued, etc. not required. It will be continued only. Okay.
Okay, sir. Okay.
Right. All right. Let me go to the next. But your answer is correct. You'll get full marks.
Okay, sir. Okay.
Let's go to the next page. Rotate. Okay. Let's take the next part. So when it is 40, your gain or loss becomes 0. Okay, Dakshinamurthy, in my class, I have taught you this on a total basis also. Okay.
Yes, sir. Yes, sir.
Yeah, I would recommend go by a total basis because per unit is correct. I don't say it is incorrect. It is correct. But
Okay.
you have to take the EPS before and after in one particular benchmark. Here it was
Okay.
gain or loss is 0, so you will not have an impact. But sometimes what
Okay.
happens is you will have a gain or loss, and that time you will not understand what is the correct number because you have an exchange ratio also coming in the picture. Am I right?
Yes, sir. Yes, sir.
So better to
Yes,
do
sir.
it on a total basis where there will be no room for any kind of confusion. All right.
Okay. But I
EPS
have a
after,
doubt, sir, in this
yeah,
answer.
yeah,
Sir, in that F, sir, in working note F,
yeah.
many time some of ICI book say that total
They're doing it
just
on a per unit basis, is it?
yes, sir, but per unit basis, but based on existing number of shares, sir.
Yeah, some
But
they do it on the new number of shares. Am I right?
yes, sir. Yes,
To
sir.
avoid that, if you do it on total basis, then they will have no room for confusion. That's what I'm trying to tell you.
Okay, sir. Okay, sir. I
All
have
right?
some doubt on that part, sir. Okay.
Sure, sure, sure. So see here
Okay.
what they have done, they have put 40, 40, 28, 20. This was easy. But see, they have done 40 into 0.7. It is not easy for us to understand this way, but if you do it on a total basis, you will always understand that part.
Sir,
Alright?
okay.
Alright, fine. Let me clear the screen. Gain from the merger if the exchange ratio is 1:1. Okay, so when it is 1:1, you get a gain of 68.56 rupees per share. You got 36? Yes, 68.6. Is that the same answer that they have got over here? Yes, perfect. So your answer is correct for the second part also. You have mentioned the working note also clearly. You will be getting full marks for that part also. Okay.
Okay, sir. Okay.
Then you have maximum exchange ratio acceptance that is coming to 228.56. Let's check it over here. 228 is the MPS of share market price before merger. So they're making a gain of 21. So even that answer is correct. So maximum exchange ratio acceptable will be, 1 minute. Hold on. Here there's a mistake, Dakshinamurthy.
Yes, sir.
They put A
Done.
is written, B and C are striked off. Then you got 250 is the MPS before merger. What is the 6,400? Can you tell me?
Sir, that is the market value of the after merger, sir.
Okay, then again, you cannot write MV. You have to
Okay.
properly write market value.
Value after. Okay, sir.
It is not visible also. So what is this? Maximum.
That is maximum.
Okay.
I
Okay.
got,
Come again.
sir, in that first mock test, I have many places. I have strike of some answers, some wrong answers. Many places I have strike of. So
Okay. That's okay. That's okay. No problem. The answer is correct. 0.7 is the answer. Your answer is correct. But just that it should be understandable by the other person also. That's all. Okay.
okay, sir,
Fine.
okay,
You can give yourself full marks for this question also, Dakshinamurthy. Okay.
okay.
Let's check Rahul's answer. Rahul, your answer is also correct. You can also proceed with the same thing. Okay. All right. Great. Let me go to the next question now. Daksh is importing a machine. It's a Forex driven question. So you should start with the basic data and then solve it and take it forward. Okay, you are having value of the machine, basic data interest, value of the Q1, interest, value of the Q2. I believe this answer is correct.
Yes, sir.
Yes, the answer
But
is
second part I have done wrongly, sir.
okay. Second part, there is a mistake, is it? So when you put it correctly and your answer is right, you get full marks for that. Okay, so for example, in the exam, if they're asking you one question, this question would have come for 6 marks, correct? How many requirements are there over here? 2 requirements are there. So ideally, it should be 3 marks and 3 marks for each one of these. Okay?
Okay.
Right. Okay. Then let me check your answer. Second part, you have gone wrong, is it?
Yes, sir. Yes, sir.
Okay, so there you cut marks, 3 marks you can cut for yourself. All right?
Okay.
Yes, I think Rahul, even for you, the first part is correct. Option 1 is the best option. Let's check. Yes. Rahul, I think your answer is incorrect. Here they have told option 2 is cheaper, but you have given the answer as option 1 is better.
Sir, I have a doubt on that
Yeah, tell
question,
me.
sir. Sir, in that question,
Okay.
please show the question, sir.
Yeah, where is
Question,
the question? Yeah.
sir, answer.
Okay.
Hello. Second
Yes, I
part
can hear
answer.
you. This part, right?
Second part answer, sir.
Answer is the doubt that you have, is it? See, here is the answer. Option 2 is cheaper is what they are saying. They have done the cost of letter of credit 1%. Interest is there. Again, interest is coming in.
Okay. I understand that, sir. But interest for 180 days, is it for full 180 days or quarterly rest in
Okay,
quarterly?
that part, if the question is silent, ideally we should take it on a quarterly rest because in part 1 we have taken quarterly rest. Am I right?
Yes, sir. Yes, sir.
Ideally, they will take loan from the same bank only.
That didn't mention, sir. So
They didn't mention. Okay, so there you can take it in both the ways. You can do it on here. I think they have done it flat. Am I right?
yes, sir. Yes, sir.
If you do it on quarterly rest, also nothing wrong. That's also
Okay.
correct. In my
Okay.
class, I do it using quarterly rest.
Yes, sir. Yes, sir.
Okay, perfect. So let me go to question number 3 now. Question number 2A. Mantra is planning to buy LA Limited. Following is given in respect of LA Limited, which is expected to grow for the next 3 years. Growth rate will stabilize at 8%. Okay. Revenue, cost of goods sold, operating expense, capex, depreciation is given. During high growth, revenue, etc. is given. Tax, basically a question on valuation. So value of a company is nothing but present value
Present.
of future cash flows. Am I right? Let's go and check. Cost of the machine. What is this part, Dakshinamurthy?
Previous question, sir.
It's previous question we just completed now, correct?
Yes, sir.
The last part, not into the hedge. Okay.
Sir, I have another doubt in second part, sir.
Yeah.
And that forward rate.
Okay. Please tell me.
We take as a forward rate as 77, sir.
Okay.
Then reduce the 30,000 rupees from that.
Yes. Correct.
Add 30,000
So
with
you can
the
reduce it. That's an expenditure incurred, right?
yes, sir. Sorry, sir.
So you can reduce it from 77,000.
Reduce. Uh, then select A or B option. Option one or
Yes.
two, sir.
Yes. Correct. Correct.
Okay, sir. Okay.
All right. Okay. So now let me go to the next question. One moment. Okay. So you have done 15, 77, 11 lakh 55 minus 7. So you're still getting a better answer. Okay. Here the additional cost has to be added because it's a cost involved for you, right? It's an importing of the machine, correct?
Importing the option.
So then you are ending up paying 11 lakh 85,000. Okay. Because then they are checking how much is the cash flow. If it's higher than accepted, then better go with the new one. If it's cheaper, then go for this. Otherwise, you can ignore this part. So in
Yes.
this question, the final conclusion what they have given is that company is not interested to take the currency fluctuation and wanted to hedge, then it can do so because even if the forward was resulting in increased cash outflow by the same amount. Here also they are
Yes.
paying 11 lakh 78,000. Even here they
78.
are paying almost the same amount. Am I right?
Okay, sir.
Here it's 11 lakh 85 is what you have got. Let me just check.
77 into
70,
77 into 15,000 plus that.
77 into 15,000 is 11 lakh 55,000, correct? Plus you have an extra 30,000 involved. So you are paying 11 lakh 85,000, but here you're ending up paying only how much? 11 lakh 78,000,
One is
correct?
cheaper, yes.
Yes, so this is cheaper actually. If you look at it from this angle, option 2 is still cheaper. All right?
Yes, sir.
Okay. Let me go to the next question now. 3A. Let me check question number 3A. That is this one only, right? This is 2A. You haven't done 2A, Dakshinamurthy?
No, sir. In next, I done in last, sir.
Okay, fine. I'll go in your order in that case. So let me take question number 3A. Everyone take question number 3A. Okay, so they have given you the number of shares, face value, purchase price, dividend is given, and the probabilities of the market is given over here. Expected price and the average return of the portfolio. All right. So this one is actually very simple and straightforward. I'll show you the direct solution and then we can discuss that part. So here you have 228 and 318. These are the expected values. And then you have expected dividend capital gain. You get a yield, market value. You get 10.48%, 11.38%. With the weight, you get the weighted average return as 10.85%. Okay, let's check what answer you have got.
I got same answer, sir.
Same, you got 10.48. No, that's for the first one. Okay, fantastic. So you got the same answer, right? Perfect. Then you give yourself full marks. Everybody, when you get exactly the same answer, you can give yourself full marks. Presentation need not be like this. You can present it however you want. Ultimately, what are they trying to ask you over here is that this question is total 5 marks. There are 2 requirements. Okay. So ideally, it should be 2.5 and 2.5 for each of the requirements. So if you have got one correct, give yourself 2.5 marks. All right. Let me go to the next part. One minute. I'm also live on YouTube. I hope YouTube students are all comfortable. Not sure if all right. I think it's comfortable here. Nothing to worry. I'll go to the next part now. Okay. Right. So where are we? We have reached here. Question number 3A, correct? I think next you would have done 3B. 11.38. 3B. It's here. Okay, let me check the question first. 3B, you have number of shares, beta, purchase price, Nifty futures are quoting, how to hedge, Nifty goes up, Nifty falls. It's a steady material problem that has been given over here. So let's see how you have written the answer. Yeah, tell me.
Sir, I done some mistake, but in question, Nifty future are quoting at 1,75,000, sir.
Okay.
But you in your suggestion answer 17,500. But
Is
I
there
have
a typing error coming over there?
yes, sir.
1 minute, 17,500. I think that's a typing mistake in the question book
Yes,
itself.
yes, sir. So I stuck there, sir.
So sorry, so sorry. If there is a mistake in the question, you can give yourself full marks, or you do it this way now. Conceptually, if you have taken 1,75,000 and solve the remaining correctly, give yourself full marks. All right?
Okay, sir.
Okay, Nifty going up. So here actually it is 17,500 is the actual answer. So this is a question taken from your NTP, MTP. There only there is a mistake. So loss
Okay,
on
sir.
Nifty future is going to be 87,500. Gain will be 87,500. Net gain or loss will become 0 because you're doing a perfect hedging. S0 into beta into 100%. All right.
That was great.
Right. Even if it falls down, your gain or loss will turn out to be 0 only. Okay. Right.
Okay, sir.
Then they have asked you what are the principles of technical analysis. Correct. Okay. So that is a very simple question.
But theory part, I'm still,
You
sir.
left it,
But
is it? Fantastic. Theory, you should study Dakshinamurti. Very, very crucial. Okay.
study,
Next.
sir. But I didn't complete the whole theory, so I am unable to
Understood.
write, sir.
That's fine. That's fine. Okay, I'll just show you the answer. Market discounts everything. Prices move in trends and history tends to repeat itself. These are the 3 points what they have mentioned over here. Okay. Right. Let me go to the next part now.
Sir.
Yeah. Tell me.
Okay, sir. Okay, sir. Continue.
Sure. If you have anything, please tell me.
No issue, sir. I have a doubt on fourth question, so
Okay.
continue to.
When you do that, that time you tell me. Okay. So 4B is the next one that you have done if I'm not wrong. Correct? 4B, you have got the CAPM written. Let me read the question first. Okay, it's a question on free cash flow to equity method. Am I right? Okay. So here, if you see, they have done this CAPM. You have found out price. You have done using Gordon's model. You have found out the free cash flow to equity 286.48. Looks to be correct to me. Let me double check and confirm.
Yes, sir. Correct.
Correct only, right? If it's correct, give yourself full 4 marks. Fantastic. Okay. Next question. 4B is a question on, that is what we did now, correct?
Yes, sir.
Then I think you have done 4A after that.
Yes, sir.
4A is a question where you miss all the documents. Let me just check. Okay. 4A, you have mutual fund A, B, C. They have given you the amount, NAV, dividend, dividend value, purchase price. Then you calculate the NAV return, that is NAV1 minus NAV0 plus D1, etc., etc. And you get the value of excess 329 days.
This is wrong, sir. But I have done working wrongly, sir.
You've done?
Done wrongly, sir. That
That's
question.
incorrect, is it? It's supposed to be 300 days. Am I right? Okay.
Yes, sir. 300 days, but I have done X bar 365, but the answer was 365 bar X.
Okay, okay. That's fine. You learned by a mistake, right? Corrected and put it in reading pen. All right?
Yes, I have already.
And then you have
Correct.
date of original investment is there, total yield is there, past three schemes details are given. So just cross check like this and tell me if you give yourself marks for this question. Okay. If anybody is facing any doubts, please let me know immediately. Okay, I'll clear your doubts also. So you should know how to value and get marks in the examination. Very, very important. All right.
Sir,
Yeah, tell me.
can you explain seventh part of the answer?
Okay, seventh part, if the mutual funds are charging an exit load of 5%, see, if second part is B, am I right? Okay. This is already, sorry, not B. I think it's coming from mutual fund A.
Sir,
Investment
four is
redeemed,
seven. 4A7, seventh part, yes, sir.
yeah, redeemed of units MFB, but MFA after 65 days. That's because, see, what has happened is B is in super loss, correct?
Yes, yes, sir.
So even if you have an exit load, you should redeem.
Yes, sir.
Okay. A is outstanding for how many days already? 300 days.
300.
If I wait for 65 days more, this load will not be charged because this will come only if I redeem within 1 year.
Yes, sir. Yes, sir.
So after 65 days, what I can do, I can redeem mutual fund A. By doing so, I don't have to pay this 5% charges, right?
Yes, sir.
That is what they're trying to tell you here.
Okay, okay.
All right. Fine. Let me go to the next part now.
Next. Next question, I done 2 years, sir, but
Okay,
various mistakes I done.
that's okay. That's okay. We learn from our mistakes. So that's, you mean this one? Theory you wouldn't have done, right? Net interest position risk.
2 years, sir. 2 years.
2A is what you did next, is it? Let's go to
Yes.
question number 2A. I'll show the answer from here. Okay. You have revenue, cost of goods sold is there, OPEX is there, depreciation, EBIT, tax, EAT, CAPEX. So you find out the free cash flow. Once you get the free cash flow using two-stage dividend discount model, you do the valuation and the final answer will be 23,040. So here, ideally you should go working note by working note. For what is the total points or marks for this question? 8 marks, correct? Out of this 8
Yes.
marks, for the free cash flow table, you can give yourself 4 marks. 4, KE 2 marks, present value 2 marks. Okay? All right. Then when you talk about 4B, it's a question on Forex. We have done this question in our class. 3 marker. That should so sad. Friends, change this marks here. Make it 8 marks. That's a correction, okay? Such a big question. Lokirti, you have a doubt from the whole question from merger is asked to find the gain from merger or impact on merger. Yes, Lokakirti, always do it on total basis. That's the easiest and a straightforward way. Okay. Yeah, Akshay, you
Okay,
can ask, but let me finish the valuation part so that students don't get deviated. Is that okay?
okay.
Okay, just do one thing. This one question, change the marks here. My team made this question. I should question them for this. How can they put 3 marks for a futures question? Make it 8 marks, friends. Okay. Out of the 8 marks, you give 1 mark for forward, 1 mark for no hedging, 6 marks for currency futures. All right. I have a heartless team. Sometimes I feel like that. 3 marks, or that will be a typing error. Okay, so that part is also clear. Now let's go to question number 5A. I think we already discussed 5A. No. 5A, they have given you the beta. They have amount to be invested. They want you to find out the overall beta. Overall beta, and then bull phase, bear phase. A very, very easy problem for 8 marks. You can put 4 requirements are there. You can put 2, 2, 2, and 2. That's how they will be distributing the marks in this scenario. All right. So let me take the solution. This is done. Okay, beta. So first part, you do the overall beta, you get the answer as 0.98. Second part, again, they have changed the weights, you get the answer as 1.155. Third part, they're asking you to calculate the expected return, that is CAPM return. Okay, so 12% into 0.98, they have got 11.76 or 13.86. Securities to be selected during bull phase. Friends, when you have a bull phase, you can select security with a higher beta because that way you can make more money. And during bear phase, you can select securities with a lower beta. Are you clear?
Okay, sir.
Next question is a question on constant ratio plan. We have learned this. We learned a question on Sunidhi. This is a question on Srinidhi. So that's okay. 6 marks is the question. So you'll put the data. We have learned the whole thing in our class, how to do this, and rebalancing. Everything is done in class, friends. So this is how you should do it. And you get the final answer as 5,56,000. Yes. Then you have theory, various methods of hedging, interest rate risk, FRA, IRF, IRO, etc. Asset and liability management comes under the chapter of securitization. Okay, and then you have foreign currency convertible bonds. These are bonds that can be converted. So that's what are their merits and demerits. These are the questions that has come over here. All right. Yes. So we are done with this one part. Also, please give yourself marks based on this. And please let me know how much marks you have scored. You can message me personally also on my number. Okay. Next week, we'll discuss the next mock paper. Sorry for the last week, friends. I wasn't keeping well, so I couldn't keep an examination for all of you, or I couldn't keep a mentoring session for all of you. I hope everything is fine. I hope you are able to study properly. I'll send you all a
Yes.
personalized message today. Many of you are not doing the assignments. You'll get a personalized message today or maybe tomorrow morning from me. Please do reply to that message also. Okay. Akshay, you had a doubt on Forex, right? Can you ask me now? Akshay, are you there? Akshay, you're not audible. Lokakirti, you send me an image. Is it for me or is it for you?
For you only, sir. So this question is question 1, sub question A4, sir. I want to know whether the answer can be presented this way because neither the book back questions answer is this way or nor is the answer key this way, sir. So
0.7 is the answer.
no, sir. The answer key they have found this 0.7 in some other manner, sir.
That's okay. They can find it in whatever manner. You also have got the same answer. You've done it in a logical way. Nothing wrong in this.
We can conclude the answer by proving that there is no loss or gain for neither of the parties. This is fine, no, sir?
Yeah, the proof is not required. You'll be wasting too much of time on that. Here, how did you prove it? You show MPS post-merger, MPS pre-merger, is it? Even EPS post and pre-merger will be the same, right?
Yes, sir. So, because the answer is quite straightforward, sir, compared to the suggested answer. That is
So
why
this
I
is
was
the
wondering it.
maximum exchange ratio acceptable to the shareholders. See, what do you mean by the word maximum exchange ratio? That, see, there are two questions. One, what is the exchange ratio in which no shareholder will have a loss?
Yes,
That is in the ratio of EPS.
yes.
Here, let me take the question 1 minute. Let me explain to you in a different way. Here, what they meant by the word maximum exchange ratio is you have multiple ratios over here, correct? What is the ratio you get based on EPS?
28 is to 40 means 0.7.
28 is to 40, or can I say it is 28 divided by 40 or 0.7 is to 1?
Yes,
And the
sir.
other one is 160 is to 250, correct? That is going to be what 0.64 is to 1. Am I
Yes,
right?
sir.
What is the maximum out of this?
0.7.
That is a max, that's all. There is no
Okay,
proof
sir.
required for this.
Okay, sir. Fine then.
Got it. Proof is required when they ask you what should be the exchange ratio so that no person will make any gain or loss.
Okay, sir.
Got it?
Okay. Thank you, sir.
Thank you.
Sir, am I audible now, sir?
Akshay, you're audible now. Yeah, tell me.
Sir, in Forex chapter, page number 10.31, sir,
Okay.
the question says like the bank has agreed to sell the Forex, sir, but the similar kind of question is there in book bank in question number 44, wherein the bank has agreed to purchase like to say it vice versa. In illustration 4, I am in need of the dollar. As a customer, I'm in need of the dollar. So bank has agreed to buy the dollar from me. And in question number 44, bank has agreed to sell the dollar for me, sir. Like they are both similar kind of sums, sir. But institute has adopted different methods for both the sums, sir. That's what.
Let me take question number 44, and which is the other one you're talking about?
Illustration 4, sir.
Let me take 44 first.
Yes, sir. Fine.
Anyway, the bank has entered into a 3 months. 1 minute. Customer with whom the bank has entered into a 3-month forward purchase contract means the customer is going to sell to the bank.
No, sir. In this question, it is said like the bank is going to sell the Swiss franc to the customer, sir.
No, customer bank has entered into a 3-month forward purchase contract.
But in answer, like just a minute, sir.
So wait, purchase contract means buy Swiss franc from bank point of view. Customer point of view, it sells Swiss franc.
Okay, fine, sir. Fine, sir.
All right.
Fine.
So when
I'm wrong, sir.
this, here it will be buy rupee only, right? Correct. And here it will be sell rupee. Exchange rate is rupee per Swiss franc. Commodity being Swiss franc, it will be the bid rate. This is where you have a doubt, right?
Yes, sir. Like the institute has adopted different approach for another illustration, sir. That's the doubt. Yeah.
Let me take that.
Yes, sir. Page 10.31, sir.
Exporter X has entered into a forward contract to sell US dollar $1 lakh. So it will be sell only. Exporter enters into a forward contract to sell. So sell dollar, bank is going to buy dollar.
It's correct, sir. But in the swap difference, they have taken the difference. The amount of swap difference is arrived at spot rate of the here, like that 65.22 minus 65.42.
Okay, that part, let me explain to you. You're talking about the swap loss. That part
yes, sir.
you're talking about, right?
Yes,
okay.
Sir. Yes, sir.
Okay, I think I got what is your doubt over here. You don't have to do it like this. You can do it in the method in which the other question has been done. I'll show you. Okay, so maybe your doubt is not on that. I'll solve it and explain to you.
Okay, sir.
What is the first date? October. So it is 1 October 2015. All
Okay,
right.
sir. Yeah.
On this date, what has he done? Sell at 65.4.
Correct, sir. Correct, sir.
Sell at 65.4.
Correct.
As he received the amount on early. It's an early delivery question.
Yes,
This
sir.
is happening on 28 November 2015. He's supposed to receive the money. Am I right?
Correct, sir. Correct, sir.
Originally, he was supposed to receive the money on what date? 31/12/2015.
Correct,
So he
sir.
would have entered into a forward contract which is executable on 31/12. Am I right?
Yes, sir.
So what will he do? He will have to cancel this contract by entering into a buy 1 month forward. Am I right?
Correct, sir. Correct, sir.
Buy 1 month forward means it's going to the ask rate. Say it's 65.42.
Yes, sir.
So both of this will come over here and it will get nullified.
Okay.
Okay, so when you look at this, you have a difference of 65.40 and 65.42. You're making a loss of 0.02 into 1 lakh. That is nothing but 2,000 rupees is going to be your loss over here.
Okay, sir. Okay.
And I think that's the same answer they have got.
Yes, sir.
No, they have got 20,000. Hold on.
65 point.
Sir, 1
Yes.
lakh 2.20.
Now I'll explain to you. See, you don't worry about that. Interest and outlay on funds.
1 lakh into 0.20.
We have made a small correction mistake. 0.65.42 minus 65.4.
No, sir, it's correct, sir. 2000 only, sir.
They have got the answer as 20,000.
Yes, sir. Yes, sir. Like if you go to for question number 44, sir, they have adopted another approach. That's the thing.
No, wait. I'll tell you. I had done this in class. I'll tell you. Just give me 1 minute.
Yes, sir. No,
Where is the 65.22 coming from?
this 65.22 is a
Okay,
spot rate.
I'll tell you. No. What has happened? I'll explain to you. Okay.
Okay, sir.
This buy you're clear, right? So the moment I do this buy,
Yes, sir.
this is a forward contract. Am I right?
Correct, sir. Correct.
This is sell forward. This is going to be your buy forward. Am I right?
Correct, sir.
So with these two transactions, what has happened? The forward contract has got cancelled.
Cancelled.
You
Correct.
get a loss of 2,000 rupees.
Yes, sir.
Then what will you do? You will sell spot. At what price? 65.22. That is because now you are going to execute on this particular date. Am I right?
Yes, sir.
Okay, so when you look at the net impact of this, you will get 65,22,000.
Yes, sir.
Okay, minus you're going to make a loss of how much?
2,000.
So what is the net amount you're receiving in your hands?
65,20,000. Okay.
65,20,000. Now let's go and check that below. 20,000 and 275 will come up. Along with this, you are going to take 65,40,000 minus 20,275. So you get ignore 275 for time being because that is the interest on outlay of fund.
Okay, sir.
Okay, so if you ignore that, it will be flat 20,000 over here. Do you agree with me?
Yes, sir. Correct, sir.
So when you remove this, what is the final answer you get over here?
65,20,000.
Is that exactly the same answer I've got over here?
Yes, sir. It is same, sir.
Same answer, but they have done it in a slightly different manner. Okay. Why they have done it in a different manner is because here they have some charges for early deliveries there.
Okay, sir.
Okay, it's these all illustrations, illustration 4, 5, 6, 7, all are done in a slightly different manner because you have a concept of swap loss, interest on outlay of funds. Akshay, I'm not sure. Have you attended my regular class by any chance?
Yes, sir. Yes, sir. I was part of A&M, sir. Yeah.
A&M classes. Akshay,
Yes, sir.
when I did that, I had told you there's one question which is 1.5 hours long, and I gave you to do that question as homework. Do you remember that?
Yes, sir.
If you go to batches, that question has been put as a video in the app batch itself where you are attending, if I'm not wrong.
Okay, sir.
Correct? Just that video, once you attend, you will understand why they are doing it this way.
Okay, sir. But
Okay.
in question 44, like the answer is not tallying with the way which they have done with illustration 4, sir.
Question 44 it does not have early delivery. Question 44 is not a question on early delivery. It's a question on maybe late. Let's check the question.
Okay, it's cancellation, sir. It's not early delivery.
It's a pure cancel. It's not an early delivery question. They are two different.
Okay. Okay, sir. Okay, sir.
This was a 3 months purchase contract. They are just cancelling after 2 months. That's all.
Okay, sir. Fine, sir. Fine, sir.
Okay.
Yes, sir.
Fine. All right, friends. Any other doubts you have? Okay. In the same way, please correct the other mock paper also yourself. Next week, I'll come live and I'll recorrect it again. Okay. But please attend this mentoring session. It's hardly 1 hour of time, friends. Please invest that 1 hour so that you get the best out of this. Okay. Thank you so much, friends. Have a lovely time ahead. Take care. Thank you so much.
Thank you, sir. Thank you.